We've had some volatility recently. Over the last 10 days, the S&P 500 down a little bit less than 1%, but lots of chop. The political headlines, the Fed, trade uncertainty. The interesting thing is that we were just taking a look at a chart. We have it here, in fact, in the terminal. On a seasonal basis, the S&P 500 would have to have a really rough fourth quarter to give up the gains that it has this year, even if it doesn't make it back above 3,000. So what do you make of all this, and what are you seeing in options land around that fourth quarter?
Sure. So I think August of this year is still fresh in traders' minds.
So they're a little cautious.
They're a little cautious. The VIX was up 14% yesterday, the highest percentage move since August 23rd, which is when we were last in that bearish flight to safety mode. Seasonality always plays in. It was this time last year, as we remember, was when right before we sold off.
Again, if we look at this chart, I mean, the S&P 500's gain right now relative to last year is so huge. I mean, it would have to be a total bear crash to do anything like what we did last year, which that could happen, but it seems less likely maybe?
Yeah.
Or are you seeing that in options?
Well, I think in options, you're seeing a lot of, it adds to the complexity, and people are using options because of their flexibility around trading specific targets to the downside. Because, for example, if you just buy puts outright, you make money in an outright crash or an outright down move. Mm-hmm. But you can use put spreads to have a more targeted, nuanced view to the downside.
Well, speaking of put spreads, you're seeing one in what some advisors in the past have used as an alternative to equities, which I think is a little bit, I don't want to say sketchy, but maybe not the soundest plan. But in any case, high yield bonds and those ETFs. So HYG, you brought a chart with us that reminds me of the S&P 500 chart, just in the fact that it's capped out at these records. The bulls can't quite push it through.
Yeah, and you can see that the momentum's starting to stall. Actually, the MACD indicator, which is a widely followed momentum indicator, just flashed a bearish signal. Yet today we saw a very large put spread trade in the HYG. A trader bought 30,000 December 86 puts and sold 60,000 December 84 puts. So there's a couple of things interesting about this trade. Is one, as you noted, it's highly correlated. The HYG is highly correlated to the S&P 500. So some people use it as a levered play. Number one is you have both strikes are below where it's trading right now. So the trader put this on, collected a nickel. So if HYG goes sideways or rises, the trader makes a nickel. Now, there's easier ways to make a nickel. We think this is a hedge because the trader actually makes money at 84, which is $3 lower than we are now.